Hello everyone and welcome to Crypto Ripto. I'm Christian and in today's video we're going to go through how to buy the dip. Now a lot of you have been asking me saying how is it that you buy the dip? How do you combat your emotion? How do you know when to buy the dip? What are your trigger points and what is a simple strategy in layman terms? You know, we're not talking about needing to be a Wall Street investor. You don't need to be Warren Buffett or Wally of the Wall Street. I'm going to give it you in simple terms minute strategies that I use to buy the dip. Now we'll go through another video of how I take profits in order to keep my portfolio with 25% stable coins to buy the dip. But for today, as the markets are down, I'm going to show you a simple strategy that will change the way you invest in crypto. And if it doesn't, drop me a comment, tell me why it didn't, and I'll try and give you a one-to-one combat of how I can do it for you. But for me, this is a no-brainer, simple strategy on how to buy the dip, when to know the dip is, and how to combat your emotions. So if you want to know this key cheat sheet on how to get over all of this, stay tuned and let's get into the video. So you're back, well done. So before I get into this video, I have to say anything that you see, hear or choose to ignore is not financial advice. No, I'm not a financial advisor if you've not got that by now. But what I am is a key investor that's been investing for over 10 years now and been in the crypto industry since the 2017 kind of era. And I do know I have tried so many strategies on how to buy dips, stop myself FOMOing in, stop my portfolio bleeding out like someone's gutted me like a fish, and all them key mistakes that a lot of newbies, crypto traders, investors always seem to fall into. Now, my number one advice before I get into this cool little cheat sheet is remember, you have to tell yourself, are you an investor or are you a gambler? This is the key important thing. If you have to say it 50 times over in the mirror, then go and say it, because we want you to be an investor, not a gambler. Therefore, you have to have a plan, a strategy, some emotion that you can control, and more importantly of all, you have to do your own research and only sort of invest what you can afford to lose. So with that being said, I'm going to go through quickly the Bitcoin market, the crypto market, to tell you what a state it's in as of today. Then I'm going to jump straight into the cool facts of this massive cheat sheet on how you can buy the dip and what my sort of key strategy is, simplified down in layman terms. So let's jump straight into the Bitcoin price chart. Boom. So as you can see, Bitcoin is having a little bit of a relief rally from its low points of around about 35,500. Now it's gradually been grinding its way up and it was touching at the $39,000 mark. Now this is after the big squeeze down that the retail money got dumped on by the institutional money, and they dumped all the way down to around about the 33,000 mark. But since then, the volume's been coming in little waves and draves, and it has been steadily grinding up on the daily candles. And as you can see here, we've only had one daily candle that's been lower than the rest since the crash happened. And we've sort of gone straight back into this descending trading channel, which Bitcoin has been following since its all-time high back last year. So for me, Bitcoin is gradually getting there. It's gradually getting up, and we do want to see it getting up to around about the 40,000 mark and sort of push through and make this as its main support. For me, it's got to break this 40,000 level here and trade in between 40,000 to 41,000. And then obviously turn that into support and start testing this kind of resistance at the top of the trading channel here. But if you're seeing this, you will see, look, that we are getting to near the death cross. So this could be a psychological moment for people to want to declobber some of their Bitcoin. But as we know, Bitcoin and altcoins are gradually breaking apart because there's not that many Bitcoins on the exchange at the moment. I don't know whether the whales or whatever it is has not been putting a lot on there to be sold. That's why the institutions and the market manipulators and makers are trying to squeeze the retail into selling their Bitcoin, because obviously it's the retail that's got a lot of this Bitcoin that are not giving it up at these low prices. So this, in my opinion, is why you're seeing it grind it. They're testing the market here, they're testing the market here, and they'll slowly go all the way back up until they hit around about the 40,000 mark, where there is a lot of sell orders, there is a lot of like sell pressure around about the 40-41 mark, because that's what people want to see Bitcoin hit. They do think the bears think it's going back down, retesting the 30,000 levels down here, and then they'll accumulate it all back up before they give it a big push. But for me, I'd like to see the bears win and it trade a little bit sideways before they finally admit defeat, see that this is the Bitcoin finds its bottom around these levels here, and then we push on to higher highs. Now, the fear and greed in the crypto market at the moment is gradually creeping up as well. It was 23, 26, now 28. If you look at the graph here, all the way down from like January, we are gradually grinding our way out of this kind of fear measure. From what we've seen, really, we're now at the high, what we have been for the whole month of January, now going into the beginning of Feb. Now, we did say Feb would be NFT season, and we are seeing a lot of good projects come out on the NFTs now. So maybe people are putting their money into that at the moment. Then we'll see a bit of a rally on Bitcoin. But for me, if we look at the Bitcoin rainbow chart here, we are still trading in still cheap. So for me, it is a still buy the dip situation, and not as good as accumulate or buy. We are at the top end of the buying. So therefore, if you've got anything left over, do kind of look in and see if you want to buy it. But for me, I've got everything I need, and when this market dips down a little bit more, I'm waiting for maybe the accumulate or buy stage, or to see if Bitcoin starts grinding down towards the $30,000 mark. Now, I want to get into the main crisp of the video, which is buy the dip. So let's jump into this strategy. What I wanted to give you, simple strategy on how to buy the dip, combat your emotion, and what I think are the few key points that could put you ahead of 90% of the people that are investing or gambling in and FOMOing at the top. So let me show you what I think. Now, you can see here, it's called buying the dip stroke buying the crash, and simply put over. Now, the reason I've done that is because I want to explain in the first instance what I see as a dip and what I see as a crash. Now, technically, a dip is anything that sort of dips down, and you could have that at 1% all the way up to 100%. But that's not going to help you buy the dip, and it's not going to help you determine when to pull your trigger points. So first, let's decide if this is a pullback, which in my opinion is 5 to 10%, a correction, which to me is 10 to 20%, or it's a crash, which is 20 to 50% or 20 to whatever it seems to crash down to till it gets to the bottom. Now, this is where the market makers like to use the trigger points when they're buying the dip. And this comes from how the institutions look down, because they don't forget they are selling to you when everything's euphoric, but when it's on the way down, they are buying, and they only buy red candles when the market is in fear and greed. So this is what you need to determine where it is that you want to get in: pullback, correction, or crash. For me, I aim to go for in something that's retraced as much as it did. I'll probably try and look at the sort of beginning end of a crash. Now, also, you've got to make sure you have the funds to buy the dip. You should always have, and I say this a lot in my videos, 20 to 25% of your portfolio in stable coins to take the profits. Now, the question I get asked a billion times, if I had a stable coin for every time I get asked this question, I wouldn't need to trade, but it is, how do you keep 20 to 25% in your portfolio? Well, I am going to make a video on how to take profits, which will easily combat this, but that's going to come out probably towards the end of the week, next week. For now, we're just going to concentrate on buying the dip as if you have already got the 20 to 25% in your portfolio. Thirdly, and this is super important as well, you need to combat your emotions. I know it's not easy to buy when there's blood in the streets, but also see this as a business, as a job, and businesses and jobs have up and down. So you have to treat every day as the same, which I know is easier said than done. You need to get into two mindsets. You need to be in the mindset of an investor on the one hand, and obviously a mindset that you believe in your plan, because this is also put you in a great position to say you have to have the balls to buy the dip. So put yourself in an investor's mindset to say, yes, This is a business. I'm investing. I'm going to have good days. I'm going to have bad days, but this is a strategy I need to do. Believe in the plan that you set out. This is how I want to buy dips, corrections, crashes, whatever, and then make sure you've got the balls to trigger that action. Now, this comes into having a solid plan. Every point and every dip, you need to understand dip, correction, or crash. Do you know, what is it that I need to plan to set up to say, okay, when am I going to enter? How much am I going to enter with, and at what period of time? Because obviously, as we'll look on the next one with dollar cost averaging, you need to make sure that you've got the amount set up ready to dollar cost average and when to choose your entry point. Now, I am going to go into a little bit of detail how I choose my entry points in the next video, but to give you a quick brief over here, I wait till we've had the crash. It's gone past 20%. That's when you start dollar costing averaging in. So if Bitcoin was safe at 100 grand and it crashed down to 80, you'll be starting dollar costing averaging out at 80 or whatever percentage it is. Don't try and look at the chart and think, okay, I can see it doing a relief bounce, because you'll pickle yourself up. Just pick a percentage you're happy with, 20, 25%, and then dollar cost average in. If it then drops back down to say it's only gone back up to 19%, then that is your stop point to don't dollar cost average in. Number 5, I think I've pretty much covered. Pick your time frames, dollar cost average in. And number 6, more important than anything, you need to note down your buys and what prices that you have. Note down your average buy price, because then you need to wait for the market to show an uptrend or revert into your take profit plan. So you need to know what you brought in at to know when you've got the tides have turned. I need to revert then to my take profit plan, which is obviously 20 to 25% or even 30% gains. Then you start skimming a bit of profits. For me, you need to make sure that you do it on your top best performing coins, because this is where you have to replenish your 25% or 20% stable coins that you've just brought the dip with to make it sure you have big profits. Now, I will do a video, like I said, on how to take profits, because this is equally as important, and I've got a good simple strategy how I do that, and it worked really well for me. So I had 30% to buy this crash that happened, and I've already made between 20 and 35% back on some altcoins from this crash using this method. So I hope that was informational for you. It is key that when you're buying a dip that you do have a strategy and a plan, because all you'll see on YouTube and TikToks and all everyone is everyone saying dollar cost average, buy the dip, dollar cost average or buy the dip. But if you're a beginner and you've not really had the opportunity to talk to an investor or someone that has done that multiple of times, you don't know how the strategy is to buy that dip, or how you get into a state where you're not underwater and you get your stable coins ready. Because a lot of the time people forget to take profits. When it comes to buying a dip, they've got nothing to buy it with. And sometimes people buy the dip, hodl too long, wait for things to try and moonshoot to get that big cherry of a candle day, and they forget to take profits in order to keep their portfolio diverse. So they are equally as important. Like I said, I will do a video on how to take profits and simple strategy, but try this out with $10, $20, $100, and you will see that this simple strategy will put you 90% above a lot of the people investing in crypto in the market at the moment. They are super simple strategies, but they are hard to execute because of what we said. You have to combat fear, emotion, and the fact that a lot of people that are trading in crypto at the moment are not doing it with money they can afford to lose. They've sold their grand's house, teeth, kitchen sink, dog, whatever, to try and get into crypto to get rich quick. And that is the mentality you need to get out of to get ahead of the game. Is don't try and get rich quick. Try and invest smart and get rich slow, and have a sustainable investment that will change your life forever. But more importantly, what we say here on Crypto Ripto is trade smart, trade safe, and don't get wrecked.